is amazingly exciting, I think. The fact that we're actually here in person, real 3D people that I can touch. I don't know if that's allowed. Is that allowed, Keelan? It's amazing. I'm super excited about this. Now, I'm even more excited because I have these fantastic 3 guests with me. I've got Keelan from Clever Cards, Hassan from Hubbock, and Eric from Tresor. 3 agents of change, driving innovation. And we're going to try to have a great conversation about how the value chain of the payments industry is changing. And it has changed. It's changed dramatically. If we look back just a few years ago, the payments value chain was a very, very easy place to navigate. We had acquirers that worked with merchants. We had issuers that worked with cardholders and sent out bits of plastic. And then we had us in the middle as the scheme, right? And all we needed to do as the scheme was to make sure the acquirers wanted to accept our products, and that consumers wanted our cards, or that issuers kept sending our cards, and everything was fine. Now, fast forward to today, things are not as clean-cut anymore. We have 100 different types of entities out there doing processing, doing security. Some have licenses, some don't have licenses. But all this increasing fragmentation, while it makes someone like me a little bit confused sometimes, if I'm honest. I'm trying to understand what everyone does. It has enabled tremendous innovation, and it has enabled creation of new solutions that are more targeted and tailored to specific segments of the value chain. And this, I believe, is what's driving the growth that we're seeing today in payments. And I think Clever Cards, Hubbock, and Tresor are great examples of how this change is taking place and how the landscape is evolving. Now, before I speak for too long and start to bore everyone with my theoretical musings about value chain disruption, I'm going to hand over to my fantastic friends and colleagues here to introduce themselves, their businesses and what they do, and then we're going to dive a little bit more deeply into some of these topics. So Keelan, if you would like to kick us off.
Sure. Good morning, everybody. And yeah, it's great to be back in person again, 3D. So I'm Keelan Lennon. I'm the founder and the CEO of Clever Cards. We're a global payments platform that enables anyone, anywhere, anytime to be paid instantly, and to be paid instantly rather than somebody paying them instantly. And how we do that is we enable businesses and public sector bodies like governments to simply send a digital prepaid MasterCard by email to an email address, rather than a check going to a postal address, or straight to a mobile phone account number, rather than a bank account number. And essentially then the recipient gets a digital card that's tokenized, meaning the recipient can spend the card online or in-store contactlessly using Apple Pay, Samsung Pay, and Google Pay. So we're essentially enabling businesses and public sector bodies to disperse payments in various different manners, and I can talk about that later.
Fantastic. Super exciting. And I've seen your product in action, and it is almost like magic when that card just shows up in the phone. It's a very exciting thing.
Yeah.
Hassan?
Thank you. It's first event after 21 months in-house, so it's great to be back. My name is Hassan. I'm the co-founder and CEO of Hubbock. Hubbook is a single API which enables any company to embed financial services into their products. So with Hubbook, companies like Flexport, SAP, or Central. In Spain, we have Factorial, Holded. So basically systems of record who want to embed financial products, cards and accounts, into their product seamlessly. So we take care of compliance and all of the back office stuff. We can issue across Europe. And open accounts in 54 countries.
Thank you. Yeah, I think what you've done is super interesting. It's a perfect example of that value chain disruption that I talked about before, taking some of the pain away from new entrants into the payment space and helping them get going.
Yeah.
Eric, you obviously have some experience in this space as well, to say the least.
Some say.
Yeah.
So also very happy to be there in presence. And yeah, so I am the co-founder of Treasure, and I have found Treasure. It's a bank-as-a-service platform, Europe-based, and I found Treasure after having launched a first startup in France, 2006. Even the world didn't exist. So I met MasterCard that time. They thought I'm a crazy guy, but anyway, we did it. And all of a sudden, we did realize that we will have a scaling problem because of regulators, technical things, value chain. It will be costly to build something for the only one use case. So I did realize that certainly many fintechs may have the same issue. So I've created Treasure to provide all the value chain of payments by means of an API in a kind of one-stop shop, providing regulation, technical scale, all the payments value, acquisition, issuing, etc., QIC, blah, 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 everything in Europe. So any fintechs can, without a huge cost, provide their project and, I would say, develop their use cases. So we have helped more than 100 fintechs to succeed in France and Spain, Italy, and Germany.
Yeah, it's very exciting to see the scale that you guys have reached over the last, well, several years now, and the fact that you're bringing that out across Europe and helping to enable new entrants to come into the space and provide perfect payment solutions. It's super good. So moving on from there, and thank you for those brilliant introductions. Keelan, I wanted to ask you, because you're right in the middle of the fintech space and you're driving these new, almost magic user experiences. What other exciting developments do you see in the fintech and the broader payment space at the moment?
Yeah, I think for me the biggest disruption that's taking place in the value chain, and look, we're at the coalface of it, that's what we're trying to do, is that, you know, platforms like Clever Cards, really this whole area of payment control and spend management control. So what Clever Cards is doing is controlling where, when, how a digital MasterCard can be spent. But what we're doing is that we're delegating that authority out to a corporate. So whether it's the business or whether it's the government, we're giving them that delegated authority, which means the finance manager of those businesses or of that public sector body can then use platforms like Clever Cards to configure. So it means then that the finance manager can configure a payment card such that it will, at one level, it might only work in one particular retail merchant, like an airline. At another level, they can configure it so that it works in a group of merchants, like restaurants or a group of pharmacies, if it was a medical card, as an example. And then ultimately, you know, with the finance manager, essentially, rather than a bank being the part of the value chain that says that card's got this limit or that card's got this limit, the finance manager can literally issue cards to every single employee where they can daily change limits and move things around the card. So I think moving the whole configuration from bank all the way down into a business is a tremendous game changer. It controls costs, it brings out revenue opportunities, and I think that's probably the most exciting thing that we're seeing, is the fact that businesses are out there screaming for this. Public sector bodies are screaming for it. You know, I want a card that will only work in Madrid. I want a card that will only work in a certain area. You know, in some of the healthcare systems, you've got situations where medical cards are plastic, they're trying to make them digital, and we're saying, well, we can actually turn that into a digital MasterCard, but because it's a medical card, it'll only work in the pharmacy, it'll only work with the general practitioner, it may not work with a dentist, but in all of that, the practitioner is not doing expense claim forms and everything else. The practitioner's been paid straight away, and you know, so I think control is really the big disruptor that I see, and the most exciting development that I see within the whole payments value chain.
Yeah, I would agree with you. I think the control you can put a card, as opposed to other traditional payment methods as well, say like bank transfers that many people still, or the majority of corporates still use to pay their suppliers, right? A card can, at least in certain situations, help you increase the control and the amount of data you have access to associated with each payment to allow automatic reconciliation and these types of things.
Yeah.
So I agree with you completely.
Yeah.
Now, related to this and to what we were saying earlier about value chain disruption, we're seeing that the fact that the value chain has not necessarily become more fragmented, but more like an a la carte system, if you wish, that you can pick out the pieces that you need to support your business, has enabled new entrants to come into the space that traditionally were not able to provide a payment or a banking service to their customers. perhaps because they lack the skill sets, but also perhaps because they can't afford the costs of the regulation and all that stuff, right? So this is the concept of embedded finance. Now, Hassan, I know you feel very strongly about this as a development area, and you feel that it's very relevant and very exciting. Could you elaborate a little bit more on why this is such an exciting space and why it's so important?
I think it's not about plastic cards or payments at all. It's about the user experience, and it's about monetization and retention for the customers. So when we look at the B2B SaaS market, for example, or software as a service market, we have seen amazing projects built in B2C, Revolut, Chimes, N26. These are all great fintechs which revolutionized last 5 years of the consumer market. I think the next gen, or where we are headed, is where we go towards the B2B service market. We are talking about companies who are systems of record, so companies who are ERPs, accounts payable, receivables, companies who are doing expense management, tax management, vendor payouts, travel expense management as well. So all of these companies, I think they were trying to figure out using open banking to aggregate data and try to reconcile against it, but I think, and they didn't understand and they don't want to do it as well, which is the compliance bit. So the friction over there, which was, okay, I'm going to a bank, how I get a license, do I need a license? So what they want is they want to embed it seamlessly. So it's not about, I give you an API. I think we are talking about even going further. We are talking about, can I create a workflow where I can connect my Hubbook's API to create cards, accounts, FX, or all of those features which we provide through a single click using Zapier or Segment platforms, and connect it to Google Sheets. So I think it's about going towards a no-code, just like we saw the rise of Wix.com and Shopify. I think we are headed towards what is banking as a service 1.0, which is core infrastructure, right? So you have program management and all of the different pillars of the service. So I think where we are headed and where the opportunity is, allowing people like Wix.com to help their 2.5 million SME merchants with their cash flow by providing a 30-day or 90-day deferred payment card. That is super interesting. And I think what they want is, give me an API, or how can I connect my app already, which is already built, and you take care of the back office, you take care of the program management, PEPs, sanctions, and everything. I think that is where we headed. So it's about retention and monetization. It's not about who has the coolest PVC recyclable card.
Yes, yeah. No, I agree. As cool as plastic cards can be, obviously, but there's definitely more value to be derived from a fantastic back end that can help your customers achieve what they want to do and let them focus on their business rather than the technicalities of payments, which we are interested in, but everyone isn't, unfortunately, or fortunately, as it might be. Great. Eric, now, you've obviously built a phenomenally successful, now large-scale business in this space. What are the biggest success factors? What do you need to do right to get to where you are? I mean, there are many players that are trying to emulate what you're doing, but they're either not there yet or they're struggling to get there.
Yes, it's, I would say, a deep question.
Yes.
So I think what we have built, so first of all, your platform has to be accurate, reliable. Okay, let's say it's the case. You cannot, one of the main, I would say, success key is to be balanced between the user experience and the fraud, the AML aspect, because at Treasure, we never, I would say, set a solution where for the onboarding you have skip, done. At the end of the day, it means millions euro of fraud management. So in terms of operation, in terms of fraud management, it will be huge. So you'll be completely overbooked with bad things, instead of developing your added value and your features. Yeah. So that's the point. So you have to be very, very good in delivering an industrial machine with some, I would say, balance, factors to provide a high quality of onboarding user experience without damaging the fraud, etc., and the operation, as you need to be industrial. If you are not industrial, you cannot scale.
Yeah.
If you cannot scale, you fall down, because we are in a volume business. So that's really, in my business, that's the point. And for the fintech that are connecting to us, they have to really care the user experience and the quality of their service. You know, it should be really very nice, developed, very clear. You cannot say, I'm doing this. Okay, it makes too many noise, and people do not understand the value you're proposing. So they have to be really focused on their business, focus on their product, and make it right and very clear. So as soon as you are doing this, you say you have a very clear added value proposal, and if you execute it very well, I think you get it.
Yeah, I think that makes sense, and I think your business is a great example of this in real life, right?
Yeah.
If you don't mind, I have a follow-on question that I'm curious about, which is, you are now owned by a large, well-established bank, of course, and I'm curious to hear how you view the cultural management of this. So the culture of driving a fast-growing startup with innovation at its core, combined with the culture of a large, well-established bank.
Yeah.
I imagine there could be some tension there. How do you manage that, and how do you find that?
I think so. I think it took 2 years to manage it. Yeah. Honestly, I thought it would be easier, but it wasn't. The point is, the Société Générale Group, it's a bank built by engineers. So they are very technical mindset in this bank. So it is even more complex with these guys, because we are talking with people who are making the same business as us, perhaps better than us, but not for the same purpose. And that's the point. So it took for us 2 years to explain them that there is no way to integrate treasure in the value chain of the bank. It would be a big mistake. But they thought we were forced, so they tried to do so. So 2 years of difficult time, I tell you. But we resist, you know, we are... So the idea, as soon as they have understood that, yes, we are making the same, I would say, features. Yes, we are in the same strategy. We share the same vision of the future. Okay, but this has been said, we do not have the same momentum. Transforming a bank costs hundreds of euros, 100 millions of euros, and lasts several years. 5 years, 6 years, 8 years. At Treasure, it costs not hundreds of euros, but it costs anyway. But the point is, the momentum is not the same. We are working for next year, not for 2025. And it was very hard to explain that. But as soon as they have understood that Treasure should remain, I would say, a separate entities, benefiting all the experiences, benefiting all the industrial capabilities of the bank, but definitively do not have the same momentum and should have its own momentum, okay, it's done.
No.
So we are now, after 2.5 years, at this point, so everyone have understood. They try again, but anyway. But, okay, so that's the challenge.
Yeah. No, I completely understand that. And at least from the outside in, it looks like you've done an amazing job of managing that tension between the different worlds or the different cultures. And it looks like you're getting the benefit you look for from the mothership to help you provide that stability and scalability, which is good. Right?
And just an example, a Treasure, we are starting to provide not only the bank as a service, the payment service, but we are starting to provide installment, accounting, billing, invoicing, etc., to our customer as a service, I would say. And you know, as I said to the bank, we cannot wait. You have transformed your insurance things or the credit things, etc. So you have to acknowledge and to agree that I will for example, partnership with an existing company, so to cope with my roadmap. And maybe in 5 years or in 10 years, I don't know, I will be very happy to propose. So I cannot wait. You transform your staff to collaborate and to build synergy.
Yeah.
So that's the point. So every time we're adding a feature to Treasure, we have these discussions internally with the group. And as soon as you do not have laid background very clear to say, okay, it is not a yes or no, it is a when, in fact, on the point.
Now, staying on the topic of culture a little bit and business growth, I'm curious to hear how you guys have found it to, at least both Hassan and Keelan have been growing and scaling businesses during the COVID period, which is not easy. I remember I've started businesses before myself, and that was in the old days when we actually hired people and brought them into the office to instill a culture and a sense of collaboration and partnership. You guys have somehow done this without meeting many of your employees. How have you found this, and how have you managed to do it? Hassan, perhaps you want to kick us off?
So in January, we were 5 people, January this year. We started last year in May 2020 as a company. And in January 5, now we are 37, 19 nationalities across Europe, +2, -2 European time zone. So we are full remote. Remote in the sense of we do have daily FaceTime with every team member. Some of them I have met today, actually. They live in Madrid. Ruben is sitting here. I have not met my investors in person, and we have raised a few million, and we are raising another round.
You're clearly very good at building trust over FaceTime. It's very good.
I think it's about, it's not about video or being in person, it's about processes. It's about better hiring and cultural fit. I didn't understand the word cultural fit until I started being a founder myself. I think it's about trying to find people who have similar synergies like yourself, who want to be in, startups are hard. Startups are very, very hard. It takes long days, so it feels like we are in a squad of, a military squad or something. You're small, you're competing against larger organizations, and you have to scale fast. So you need team members who are also being at the same energy levels, who are looking to build that public company which we want to build. So that's I think, it's about processes, communication, and hiring the right people. And then internally, when I say processes, it's not about just documenting something. It's about, we have all the way from onboardings to how customers are managed. So for example, yes, there are now some customers we are going to meet in person, but most customers are fully digital because of COVID. So we have signed partnerships with a bank as well in Spain, and we have accounts. We set up the whole company in COVID. DocuSign, shared Slack channels, real-time support on the developer integrations. So I think it's that's where it's headed. So I've got my proper mic and webcam set up because that's how it works nowadays.
Yeah, at least you're there from the start, right? Keelan, what's your experience of this same challenge?
Yeah, well, I think there's 2 bits that I'd cover. I think when COVID happened, our team is dispersed as well. We've about 60 people. It's a global payments platform, so we're inherently spread. It's not that it's a national business. We're dealing with large clients that are in multiple countries. I had quoted numerous times to say, I'm never going to jump on a plane for a 1-hour meeting again. Now that, COVID had everyone working from home, with processes and everything else, etc. The only thing I would counter it with is that 2 weeks ago, we had one particular customer where we were working on a particular project, but we took them to dinner. It's a very large company with 20,000 employees, and it turned out we were having dinner with the CTO, employee number 3. When our CTO and that CTO got together and spoke in more depth about what we were doing, we got a phone call the next day to see could we move on to another project with them, which was large. It's a $20 billion size payment volume opportunity. I honestly don't think that would have happened over phone calls, over video. You know, it was a shock, really. You know, the contrast. From our business point of view, you know, we're a payments platform where we see that really, you know, some of the disruption I think that's going to take place in the future is actually going to be about distribution, and I mean digital distribution. For us, COVID fueled that. So you know, we've got, you know, kind of two use cases in the one platform where you've got single disbursement payouts or you've got recurring payouts. You know, you suddenly had situations where people saying we can't send out gifts or incentives or awards to customers or staff because it's plastic, it has to go digitally. So, you know, that took off. I gave you the example of some of the company expenditure and what governments wanted to do, where they wanted to get it out. Again, they couldn't do that physically. It went digital. So, you know, we've got transport and courier companies, and I think that whole value chain, like, you know, they've got, and I think actually the lady prior here was speaking about it, I think it was one of your MasterCard colleagues that said she came from Mexico. That's the very use case we actually have. We've got a bunch of drivers that have come in from Mexico. They'd no bank accounts, and the courier company has the passport, has the driver's license, has everything, has the insurance for the car, but they haven't got a bank account.
Yeah.
And can you go off to Santander or Barclays and get a bank account and say, well, we can't get a bank account because I haven't got a permanent address, because I haven't got a bank account. You know, and what we're doing is saying to the company, you can open up the bank account. It's an e-money account rather than a bank account, but essentially now the earnings are going straight into that account. The account is open in seconds. So in some respects, we're disrupting the disruptors, because that money is now not going into N26 or going into Revolut, etc., because it's sourced at you've got companies basically becoming distributors of bank accounts. So it's no longer just left to the bank. And then they're coming along saying, okay, with this platform, we can manage expenses, we can do driver payouts, we can do insurance payouts, so it brings a more holistic solution to corporates, which banks in the old days just didn't do. They gave you a bank account, they gave you a credit card, they gave you very limited. So I think that's where the disruption I see is going to take it, and COVID has just helped it because it's all digital.
I agree completely. I think it's a perfect example of new services and solutions that are coming about as a result of the change to the value chain and the fact that the value chain has been unbundled to a degree. So you can actually create these type of solutions that the traditional old banks were not that interested in doing.
Yeah.
Now, going back to the topic of value chain and the unbundling of that for a second. So we've seen this over the past 5 odd years, right? That entities like yourselves have picked out relevant parts and put it together in a slightly different way to create new propositions. What are we going to see going forward? Are we going to see more unbundling or disruption of the value chain, or are we going to start seeing, is the pendulum going to go back? Are we going to start seeing consolidation? Are you guys now going to buy up everyone in the markets and create giant corporations that look like the old banks? So what's going to happen next?
Well, our core growth strategy, we've got two parts to it. It's organic and acquisition. So we just acquired the market leader in spend management in Italy this year. And you know, that was a company that got so far. It was part of a big PLC, was part of Edenred PLC. It had got so far, but what it hadn't done was gone the next level to digital. So you know, we've acquired, as a result of that business, thousands of very, very large corporates that we would never have got. In that instance, there was e-money license and everything else that we got as well. So for us, I think payments is very fragmented, and our strategy is acquisition, because we're dealing with bigger companies. In our instance, you know, these are global companies. There's a lot of businesses that are payments businesses within a country. If you're dealing with an SMB coffee shop, he or she has a coffee shop in Spain. They don't need multiple jurisdiction. When you're dealing with a multinational or technology company that deals in right across Europe, you have to be able to service them in each and every one of those countries. So certainly from our end, we're going to drive acquisition and we're going to drive consolidation, but it's really by bringing technology on top that gives the growth driver.
Thank you. Eric, what do you see in the future?
So I will change my hat a little bit and take the Société Générale one, as now also
somebody needs to represent the traditional banks as well.
Yeah, so and you know, so at Société Générale we have bought Treasure 3 years ago, and we have bought other fintechs such as Shine, which is a bank for SME. We have also fintechs on the green market. You know, we have fintechs on the insurance, etc. So we are building a kind of ecosystem, and we try to make it as coherent as possible, so to provide a common value. And yes, this is a good question. So we are scaling organically with our fintechs, and Treasure is a good example of scale. But this has been said, we are also looking at, why not, again, for time to market, and because we are working on the volume businesses, we need to be very clever on delivering your business case, you know? So if you want to deliver your business case, you need to have an eye on your volume and your turnover and the PNB, etc. So you need to, and why not acquiring companies to help you saving times, for example. Let's say, imagine that we are looking for another country. Why not buying an existing fintech, so to benefit the existing customer and the traction and the scale that is currently ruling. So we have both. I would say we have both strategy, and financing and funding the existing companies such as Treasure, etc. But meantime, also looking at opportunities on the market.
So you're a disruptor as well as a consolidator in the future.
Yeah, sure.
Hassan, what's your view into the future?
I think so distribution is very important. You need larger partners, so we are not doing end customer facing products, so we are the infrastructure provider or the cloud layer like AWS is, like Amazon Cloud or Google Cloud, like it plugs and play in any vendor. Behind there's the same old machines, but the software layer which AWS, Amazon built scales globally. So I think we think same as Amazon, there are 3 truths which Amazon has, which is the fastest delivery, the cheapest product, and the widest catalog. If you can beat them on that, you'll beat Amazon, which I don't think you'll do that. So we believe in a similar 3 truths. The 3 truths are: you have to have the widest coverage, the widest feature set as much as possible. Therefore, we have 54 countries where we can open accounts. We have 3 IBANs, Spanish, French, and Dutch coming, UK as well. And we have issuing across all these 30 countries, and we're increasing that as well. So I think it's about working with larger systems of record or companies who have already distribution power and enable them to provide these features of finance. It can be cards or non-cards, it can be payments, it can be deferred payments, installments, buy now, pay later, splitting them. We are incorporating MasterCard's new API on the buy now, pay later issuer side platform. We are doing dynamic CVV for fraud controls. I think it's about enabling the end customer, in this case for us being Wix and the Shopifys of the world, to distribute it forward in a contextual manner for that customer. So I don't feel like opening my bank account normally if I know that I am a CFO and I can pay payments already from my ERP system. If I'm a dentist and I'm using Wix.com for payments, I will get a corporate expense card, which allows my 30-day cash flow even increased. If I'm Flexport doing global trade, and how many trucks and trains and airplanes they move cargo with, all of that expense of those transportation, how do they manage? So there are people like us who are working on those use cases to enable these global distributors move forward.
Very exciting. There's definitely a big opportunity there, I'm sure. So with that, somehow we have run out of time. It always goes quicker than you think, doesn't it? Thank you so much for joining us today. Thank you for all the insight, and I'm looking forward to continuing this conversation afterwards. Thank you very much.
Thank you.
Appreciate it.
Thank you.
Thank you.